Apple obviously caught up in that broader tech sell-off. What are the other concerns that you think have investors deciding that Apple's just not for them, at least not for the start of the year?
Yes, absolutely. I mean, there's no nice way to put it. Apple has had a horrible start to the year. I think one of the main concerns, and you've touched on it there, is demand. You know, Apple sells bigger ticket, expensive items, which are exactly the kind of thing that people are potentially not going to be splashing out on, while interest rate concerns and inflation concerns are rumbling on the way that they are. But what I would point out is at the same time, I don't think that demand concerns are perhaps as worrying as they are for some of Apple's peers. You know, looking back at last quarter, you know, this is still a $19 billion a quarter business. You know, it's posted 14 consecutive quarters of growth currently. You know, that could change. I do expect that to change in the January quarters, but I don't think we're looking at a total collapse of demand for Apple. But certainly for me, the biggest challenge alongside those well-publicized production problems in China is really the demand profile from here. And the market's having a tough time mapping what that's going to look like. And that's where we're seeing so many nerves injected into the share price.
So, Sophie, obviously the U.S. consumer especially, and, you know, consumers in China as well due to lockdowns, are just spending a bit less right now. But Apple also has a very sticky business when it comes to services. I know I need to upgrade my storage. Once you get in this Apple ecosphere, it's really hard to get out, whether it's your phone, your iPad, iTunes, etc. Why aren't investors basically valuing that, just that recurring income that comes from being in the Apple ecosphere?
There are a couple of reasons for that, and also, you know, I'd point out I'm also stuck in that ecosystem. It's a phenomenal business model, and I do think that actually investors in the markets are in a way rewarding that, because yes, okay, Apple shares are down about 30% on a year view, but that's still less than, say, the Nasdaq composite as a whole, you know, that tech heavy composite. So it's still showing a little bit more resilience than tech as a whole on certain metrics. But in terms of why I think there are still some jitters, some nervousness, if you look back at last quarter, services revenue was actually slightly lower than the markets were expecting. So what we're seeing is that there's a little bit of a question mark around just how sticky subscription-based revenues are. You know, Netflix is also testament to that. Just because you have a sub-based business doesn't necessarily mean that everything is sticky at the moment, because the economic conditions, the wider environment is so dramatically difficult and far worse than anybody had planned for. So really, I'd say services still a great business model, absolutely a really important growth lever for the business, but we are seeing potentially a bit of a slowdown there. And again, the market, that keyword again, is just really quite nervous because it doesn't quite know how to map that demand just yet.
All right, certainly something to watch. Apple up 1% in the pre-market, but closed down 3.5% yesterday. All right, Sophie, one more for you. Shares of Tesla set to extend yesterday's losses this morning. The stock closing sharply lower yesterday for its worst single-session performance in more than 2 years. The stock's now sitting at its lowest level since August of 2020. This coming after Tesla reported weaker than expected sales numbers for 2022 and the fourth quarters. Tesla has now lost more than $950 billion in market value since hitting its peak back in November of 2021. What do you make of Tesla's slide? A lot of times we're talking about Elon Musk running two companies. Obviously, Twitter's a private company, and then also Tesla. Of course, SpaceX is also another factor. But what do you see being the biggest issue here with Tesla? Is it just the miss on delivery numbers? Because they did rise by about 40%.
Yes, I think you've hit it there, really. If you look at the gap between production and deliveries, you're looking at about 34,000 vehicles, and that really is what spooked the market today. Yes, there have been concerns about Musk and his Twitter involvement and whether that meant that he was distracted. But really, when you get down to it, when you look at the level of the recent share slide, it comes down to that delivery profile. And again, it's a question of demand. Tesla is facing absolutely phenomenal competition in the space as well. You know, you have more traditional car makers like Ford, for one, throwing a lot of money at electrical vehicles. So there's a big kind of competition question mark. And then at the same time, production, again, in China, but also China is a really, really important growth market for Tesla in particular. And really, we're seeing quite a sharp economic slowdown there in spending as well. And Teslas, more so than an iPhone, are exactly the kind of thing that if you're feeling nervous about the economy, is maybe something you're not going to buy just yet. You're going to hold off and see what happens. So there's a couple of things going on, but mostly it is that big gap between delivery and production. That number really spooked the market.
All right, Sophie, so when it comes to Tesla, buy, sell, hold. When it comes to Apple, buy, sell, hold.
I think it depends on your risk appetite. And what I would say about Apple is that it has and remains to have, one of the strongest brands on the planet. And I think that potentially the sell-off that we've seen has been more linked to a wider tech sell-off than anything Apple specific. Whereas Tesla, I think, is kind of staring down the barrel of some really quite specific stock questions. So certainly potentially a bit more risk there.